Okay, I have 3 o'clock straight up, so I'm going to go ahead and get started. Good afternoon, everyone. Um, this is, I don't know, maybe session number 10 in our series of web Friday afternoon 3 o'clock webinars related to the COVID-19 emergency and its impact on small businesses. So today, our topic will be a little more info on PPP forgiveness. As many of you know, we're continuing to receive information, so we'll focus on that. And then we have a very informative presentation by Steve Denny following that, which will be a kind of an introduction to some issues on cash flow that will be very, very important to all of you as business owners, given what we're facing right now as we emerge, if you will, from being closed down in this COVID emergency. With that said, logistically, I want to say again to you all, and I'm sure you're all regulars on here today, if you want to ask a question as you hear Steve's presentation, type your question in the chat box. Additionally, at the back end of this webinar, we will send out or have available for you tomorrow on our YouTube web channel a recording of the video and a transcript of all the questions that are asked. So don't worry about trying to take notes. That will all be provided to you on the back end. You have Steve Denny, who is principal with Innovative Business Advisors, Terry Lammers, principal with Innovative Advisors, both co-managing members of the organization, who are on the webinar to present to you today. And I'm going to go ahead quickly and turn it over to you, Steve, so that we can get started. A big topic today.
Excellent, Marquita. Thank you very much. So it is a big topic today, and we're just going to start with a quick update. 2.1 million jobless claims this week. The silver lining is it's beginning to look like a nice stair step back to normal. So hopefully it'll continue in that regard. But there's definitely pain out there, as there are more than 30 million people that are currently unemployed. So can't get this thing back to normal fast enough. Today, we're going to talk about Paycheck Protection Program interim final rules that have come down. So after the close of business last Friday, late in the evening, there were a couple of interim final rules that were released by the SBA and the Department of Treasury. We picked those up early this week and have been digging into those, and we're going to cover some of the things that they have brought out. It's really just about clarification on PPP loan forgiveness. We'll cover those for everybody here. And then we're going to transition over into cash flow projections. A lot of the clients that we're talking with are struggling with cash flow after dealing with a couple of months of either being short-staffed or having to close or being in limited type of operations. So we're going to introduce the cash flow projection tools that we have. We've got an early one that we'll share with you today, and then next week we'll go into more detail about doing cash flow projections, particularly in these challenging times. So let me start with under the interim final rules that have come out. They really deal with three different issues. First is owner compensation. How is owner compensation applied as it relates to the forgiveness aspect of the paycheck protection programs? The next thing we'll talk about is the loan forgiveness reduction. So there is the potential that your forgiveness could be reduced based on FTEs and salary or wage changes. And we'll talk about some of the clarifications that have come out in that area. And then the last thing will be loan reviews. How is your forgiveness application going to be reviewed by lenders in the SBA? And they've provided some additional information on that. So first and foremost, are there caps on the amount of loan forgiveness that's available for owner employees and or self-employed individuals for their own payroll compensation portion? And the short answer is yes. If you are the owner of the business and you're also an employee of the business, your payroll cost portion of the forgiveness cannot be any more than what it was in 2019. And I'm going to show you for owner employees. Again, they're capped at the amount that their 2019 employee cash compensation, retirement, and healthcare contributions were. If you were a Schedule C filer, meaning if you're a sole proprietor, independent contractor, and you file your tax returns for your business under Schedule C, Schedule C filers are capped by the amount of their owner compensation replacement. So what that means is line 31 of your Schedule C, the total net income on line 31, you're capped at that amount. So for example, let's say that in 2019, your net income as an owner operator filing Schedule C was 52,000. You would divide that by 8, and that would be $8,000. You're not able to claim more than $8,000 as your owner compensation under the PPP forgiveness. For general partners, they're capped at the amount of their 2019 net earnings from self-employment. And then there is no additional forgiveness provided for retirement or health insurance contributions for self-employed individuals, including Schedule C filers and general partners, as such expenses are normally paid out of their net self-employment income. So just some points of clarity as you're preparing your PPP loan forgiveness application as it relates to owner compensation. So next we'll talk a little bit about the loan forgiveness reductions. And these are all points of clarity that have come out in these interim final rules. Will a borrower's loan forgiveness amount be reduced if the borrower laid off or reduced the hours of an employee, then offered to rehire the same employee for the same salary, number of hours, or to restore the reduction in hours, but the employee declined the offer? This is quite common. We're hearing this a lot with our clients, is particularly with this unemployment compensation out there of an additional $600 a week. A lot of employees are hesitant to come back because they're making more on unemployment than they would be working for the company in their old job. And as we've shared before, the answer to this is no. Employees who offered to rehire their folks, even if they don't come back, the employer will not be penalized under your loan forgiveness application. But the caveat is you got to have something in writing. You have to have that offer of reemployment or reengagement or rehire in writing. So a couple of additional clarifications regarding salary wage reduction. It applies only to the portion of the decline in employee salary and wages that is not attributable to the FTE reduction. So if you'll remember, and if you've been through the loan forgiveness application form, you know that the first thing you have to do is calculate the FTE number of employees during the covered period or your alternative covered period. If you have an FTE reduction, the salary and wage reduction does not apply in that area. So basically what they've come out and said is that you are not going to be doubly penalized for having either a reduction in salary and or a reduction in FTE in that regard. They went a little further. If a borrower restores reductions that were made to either the salaries and wages or to their number of employees by not later than June 30th, can the borrower avoid the reduction in the forgiveness amount? And the answer is yes. So even if you brought them back, but you brought them back for not the full amount of time, if you had the money available to you as part of your PPP funds and could restore them to the full amount, then yes, you are exempt from that loan forgiveness reduction in those areas. Similarly, it also applies not only to that, but for the FTE side as well. So it's not just the salary and wage, it's the FTE side of the equation also. Next thing that came up was, will a borrower's loan forgiveness be reduced if an employee is fired for cause, voluntarily resigns, or voluntarily requests a schedule reduction? And it's nice to have this in writing now. The answer is no. Your loan forgiveness will not be reduced under those circumstances, which is certainly without, in many regards, the employer obviously is is firing people for cause, or if they voluntarily resigns or voluntarily requests a schedule reduction, those things are out of the employer's control in that regard. But you're not penalized when those happen. This is kind of interesting. Moving into a little bit of the loan review portion, we talked at length, and there is written guidance under the FAQs and some other information that was provided, that the SBA is not going to be undertaking a loan review for people that received a PPP loan amount of less than $2 million. And if you'll remember and participated on previous webinars, we highlighted this as a pretty big win for small business, which it truly is. Those that received Paycheck Protection Program loans in excess of $2 million, the SBA said that they intended to audit all of those loans. Now there was this point of clarity that's come out and says that for a PPP loan of any size, SBA may undertake a review at any time in their discretion. But I think, folks, I think it's important that we need to take a look at the aggregate here for a minute. Keep in mind there were millions of PPP loans, and there are only approximately 90 auditors at the SBA. So I still think while they reserve the right, and I think that's the key thing there, I think for those of you that have PPP loans of less than $2 million, the chances that you're going to be audited are probably very, very slim. All right, digging into a little bit more on the loan review side. If in fact you're a borrower and you've never had an SBA loan document before, you should know that the SBA asks and requires that you maintain documentation on your loan for 6 years following the date of the loan. They've done the same thing here, and they've said from the forgiveness or the repayment side, they're asking you to retain those records as well. So we wanted to highlight this because there may be many borrowers that have taken out PPP loans and may have never had another SBA loan in the past. So that 6-year date window is fairly universal, and you should be aware of that in the event that they ever ask to see those files, you're required to hold them. If as a borrower, the SBA does review and has questions, will I have the opportunity to respond to SBA's questions in a review? And the answer is yes. They're going to go to the lender first, and the lender then has to contact you as a borrower in this scenario, and you will have a seat at the table during that review process. If the SBA determines that a borrower is ineligible for a PPP loan, can the loan be forgiven? And I think this probably gets to the core of the sensationalism that we've seen in a lot of the media, where there have been certain public companies and other very large companies that have taken advantage of the PPP program. And of course, the SBA and Department of Treasury established that what they called safe harbor period up through, I think it was boy, Marquita, my mind's just gone blank. I think it was the middle of May anyway. And I know they extended it a couple of periods of time. Basically, what they're saying here is if the SBA reviews the loan and determines that, in essence, you didn't make the loan application in good faith and you should have been ineligible, then can the loan be forgiven? And the SBA is saying no, under no circumstances. Then, even if you use the funds appropriately, if you were deemed to have been ineligible, the loan will not be forgiven in those circumstances.
Yes, Steve, that date was May 18th. It changed several times, but the final date was May 18th.
Excellent.
For a certain category.
Yep.
Yeah.
Excellent. Next, they talked about, may a borrower appeal any SBA determination that the borrower is ineligible? And the answer to that is yes. And they went on to say that they intend to provide some additional guidance on this. So we think this is certainly one area where there'll be additional guidance, and there are probably a couple of other areas where we'll see some additional clarification in the few weeks to come. All right. Loan forgiveness process for lenders. What should a lender review? So this is what the SBA has sent out to lenders to say, what is your responsibility, Mr. Lender, in the review of this loan forgiveness application? And here's what they've come out and said, first off, the first thing you have to do is confirm the receipt of the borrower certification. So page 2 of the loan forgiveness application is that whole certification page where you as a borrower have to initial each of the statements and then sign at the bottom. So the first thing they've got to do is make sure that you've provided that information. Next thing they have to do is make sure that they have are confirming receipt of all the documentation that's required. And within the package, they've detailed all the documentation. Following that, the next thing they have to do is just confirm the borrower's calculations on the application. So again, you know, your lender doesn't have responsibility of doing a deep dive and verifying every one of your calculations. They just need to confirm your calculations and confirm that you've got all the appropriate calculations on all the appropriate lines of the application. And then finally, they need to confirm the math on the calculation on line 10, which is the loan forgiveness calculation that you are self-certifying as a borrower. So pretty simple process that the lender has to go through in order to put together the package to submit to SBA. Just want to emphasize, and this comes straight from the SBA, providing an accurate calculation of the loan forgiveness amount is the responsibility of the borrower. And then the borrower is attesting to the accuracy of the reporting there. So the lender doesn't have to go out and independently verify the information and the accuracy. The lender is just reviewing and making sure that you filled in all the right places and that you have the right supporting documents for that. Lenders are expected to perform a good faith review in a reasonable amount of time of your calculations and supporting documents. They have to deal with what you give them in that regard. So make sure that you give them good information. And I think the counseling that we're providing to our clients along the lines of having a written narrative explaining what you're doing in that regard may really assist you in that area, but certainly that's at a borrower's option to do. And then the lender should work with the borrower to remedy any issue that they find. So if the lender goes through your application and finds some issue, the lender's not just to pass along your application to the SBA and then, you know, perhaps create an issue with the SBA. They have a responsibility to work with you as the borrower to remedy that before the information is provided to the SBA. So I think that's an important distinction in that regard. All right, so let me move on. We're going to talk a little bit about cash flow. And one of the things that that we see in working primarily with a lot of small and small to medium-sized businesses is that they don't always effectively measure their cash flow. Many business owners utilize their operating statements, their P&Ls, if you will, to pay attention to what's going on in the business financial side of the equation. Don't always take a look at their balance sheets, and we find it's the rare business owner that actually uses cash flow statements to help them effectively run the operation of their company. So what we're going to give you today is a very simple tool, and we're going to advocate that, particularly in these times where you might be challenged sales-wise, where your sales may be off significantly, or even if you're prospering, if your sales are going through the roof because so many others are closed and you're getting the benefit of a lot of customers with many fewer competitors out in the marketplace. In either of those situations, it creates a lot of stress on business owners. And it's almost as bad to be suffering from huge swings in sales on the upside as it is on the downside, because you tend to lose control when you get a bunch of revenue coming in the door that was unexpected to you. That's when we find that costs typically get out of control. So what we're advocating is that you start by measuring. And we're going to give you a very simple tool here that you can now use to effectively measure the cash flow position as it sits today. So I'm going to flip over to another sheet here and walk you guys through it. And this will be available as a download on the YouTube channel, along with a replay of this webinar and copies of the slides. So what you see before you is what we call the current position sheet. And I'll spend a few minutes and walk you through that, and then we'll be more than happy to answer any questions that you guys may have. Please direct your questions to the Q&A portion of the portal here, and then Marquita will be our moderator that'll bring them to Terry and I for discussion. So start with cash. What is the cash that you currently have available today? What's your bank balance? Start with that. The next thing you do is take a look at, does the business hold any investments or bonds? Do you have any particular savings that the business has as well? Does the business have any notes that are out there? Have you loaned money to others and have any notes receivable? Then if you're a business that invoices for your sales and you have accounts receivable, we're asking you to break down your accounts receivable into two main categories: those that are under 30 days and those that are over 30 days. So why do we do that? Well, typically your accounts receivable that are less than 30 days, typically you will collect the vast majority of that. It's normally very, very high, in the mid 90s to 100% of that amount. Once your receivables begin to get older than 30 days, your collectability begins to go down. As the days stretch out, your collectability goes down with them. And if you've got receivables that are typically older than 180 days, chances of you ever being able to collect on those receivables is very, very low. So we are asking you, if you've got a large AR balance sitting on your balance sheet, don't be fooled by that. Take a look in that, dive deep into that, and find out how much of it is really current and how much of it is past due, because it's the past due portion of that that you cannot count on. Also, then take a look at your raw material inventory and your finished goods inventory and break it up into both sections. If you have work in process where you're actually taking one form of a product and doing something to it and turning it into something else, your raw materials have a value at one level, and then your finished goods have a value at a different level. So if your inventory calculation on your balance sheet breaks all that together, now's a real good time for you to look at it separately. Both of those are sources of cash. They're sources of potential cash for you. If you get to the point where you need to access cash and you don't have any other alternatives, raw material and finished good inventory can be a source of cash, as can your receivables. The next thing is look at average weekly sales deposits. So what does that mean? Take a look at what your sales, you've built this business based on what your sales cadence is producing. So if you've got average weekly sales deposits that you are normally making, be cognizant of that, and be cognizant of the fact that you may have built this business of yours to have weekly sales, let's say on average of $100,000, and now you're in a significantly different position. We're going to need to make sure that we can make some adjustments accordingly. And then sales backlog would be, do you have any orders in-house that you haven't fulfilled yet? And of those sales backlog, is it something that's prepaid, or is it something you're expecting payment on? And I would encourage you, if you have a sales backlog and part of that is prepaid and part of it is not prepaid, break that out into two different numbers, because that's going to be two different things for you to pay attention to. So that really gets into the uses of your cash up front. That is the cash that's coming in. All that are typically cash sources that are available to you as a business owner. The next side of that is, what are your responsibilities? And it begins with your accounts payable. If you have any bills that you haven't paid yet, you need to be cognizant of, what is your total accounts payable amount right now? And obviously there are people that are relying on you for that money, but we want to measure exactly where you are, exactly where your current position is. And then in subsequent webinars here, we'll talk to you about how you can effectively explore various avenues of use to your advantage. The next thing would be notes payable. Do you have any notes in your business that you're responsible for? And if so, what is the current month amount that is due in that regard? If you have payroll in your business, take a look at your weekly payroll. What is your weekly payroll amount based on what you are currently scheduled within your business? So take your employee schedule out and do a quick calculation and figure out what your weekly payroll is. And then, as we look at it on a monthly basis, you would just multiply that out. Don't forget to include the employer portion of payroll taxes into your payroll. So if you calculate your total scheduled payroll to be, for the sake of example, $10,000 a week, don't forget that you have an employer portion of FICA and federal taxes to include in that as well. So add that to your weekly payroll. If you have any long-term debt, if you have mortgages on your building or your equipment or any of those, regular scheduled monthly payments, put down what your monthly payment totals are. If you have short-term debt, credit card debt, or other short-term obligations, short-term meaning that it's scheduled to be paid off within the next 12 months, put those down as well. And then if there are any other payables that are out there, make note of what your current responsibility is for those total payables. So what you're going to end up with is basically the total look at what your available cash coming in is, cash sitting here now and cash coming in over the near term, and then what your near-term responsibilities are from a payment standpoint. And then just simply do the math. Take the top total and subtract the bottom total and see where you're at. And that'll give you can use this tool even on a weekly basis just to get a real quick sense of what do we have in the business that's available to us and what obligations do we have to meet on that. And if you've got more cash than you have obligations, you're in a good position. Many people in these pandemic situations may find themselves where they've got more obligations than they have more cash. And in the future webinars, we're going to talk to you about how do you deal with those situations effectively and move forward. But the most important thing right now is measure it. Take out a piece of paper and a pencil and your calculator and figure out where you are. Don't put your head under the sand here and, hope for sunnier days. You got to really figure out where you are if you really want to figure out how to make the turn and begin to thrive again. So with that, Marquita, just want to reemphasize that we'll provide this short sheet as a guideline for folks to use and turn it back over to any questions that we might have.
Okay, great. Thanks, Steve. Great presentation. So let's move forward. We don't have a lot of questions queued right now. So again, we may finish early. I've said that before, and we ended up going right up to the 4 o'clock hour anyway. So let's see what our participants do. But as of right now, the first question that we have relates to the application for PPP forgiveness and the new rules that were shared. And the question is, why is the net profit from Schedule C divided by 8? What's the rationale of the number 8? Oh,
I was really saying net profit divided by 52 times 8 is the full calculation. So I may have misspoken.
Okay. So that's the same calculation we used in determining our loan amount. It was
correct.
Well, actually, before it was payroll divided by 52 times 8. Yeah, payroll divided by 12 times 2.5.
Well, but if you're a sole proprietor or independent contractor, you Schedule C, your payroll was defined as line 31, your net profit.
Yeah. I hope that answers Sandy's question. Okay, let's look at another question here. And I was distracted when you were talking about this $15,385 limit do you want to cover that again? And in the specific question that Randy is asking is, does the $15,385 include benefits or just wages?
For the employee owner, it seems to be inclusive of benefits as well.
Okay, good.
Yeah, but if you are, for your employees, and if you are a company that has multiple employees, right, and you have people that are making more than $100,000 a year, you're limited to that 15,385 plus benefits. But but for employee owners, they limited you because the rationale being that your income, right? So getting back to that line 31 on Schedule C, or even self-employment income, if you're a partnership, typically includes the amount that would be inclusive of benefits and or retirement savings.
Okay, good. Terry, did you want to handle Robert's question? I thought I heard you say something. I can actually do it if you want.
No, go ahead and knock it out.
Okay. So Robert is asking if you touched on House Rule 7010, the Paycheck Protection Flexibility Act, which extends from 8 weeks to 24 weeks the time PPP recipients have to spend their funds.
I love it. Our audience is paying attention. I love it.
There you go.
So there are multiple.
Yeah, no, but you gotta read the whole question.
Oh, did we miss a part of the question?
Oh yeah, there's a lot more to it.
Okay,
Terry,
well,
why don't you take it from there?
Well, the first part of the question though is,
Robert. Oh, go ahead, Steve.
yeah, the first part of the question is there are multiple bills. That one just, I think, passed the House. So it's not law yet. It just passed one branch. It's still got to go over to the Senate and be passed and then be signed into law. And then obviously it's going to throw the calculations into a whole new realm.
Yeah. So then he goes on to say one of the groups decided to furlough their employees as a response to this because they were worried they could not generate the funds needed to justify the loan and seek loan forgiveness later. What advice can I offer to any of my groups who might be similar concerned? Well, keep in mind the PPP is the Paycheck Prevention Program, and 75% of it is supposed to go to, salaries. So that only it doesn't give you a lot of wiggle room to pay for working capital needs like rent, interest, and utilities. But I think something that business owners have a hard time wrapping their head around is paying an employee that's not even at work. So you really got two situations here. One, because of the pandemic assistance of the $600 on top of the unemployment insurance, it is creating kind of a conundrum for employees to come back because they're making more on unemployment than they are if you would employ them and use the PPP money to pay them. So there is, there's a couple different ways to think about this. One, if you don't use the money to get forgiven by paying in salaries, it turns into a 2-year loan at 1% interest and a 6-month deferment. That's cheap money for you to use. So, you can look at it from that way, or the owner can't pay themselves more, the employee owner can't pay themselves more than they did in 2019, but you are able to, if your employee's under the $100,000 limit, give them some type of bonus to for working in hazardous conditions or something like that. So I hope that helps, Robert. You got anything to add to that, Steve or McKeon?
Yeah, I think Robert and others that we've talked with, there's certainly a lot of activity on Capitol Hill as it regards either the next tranche or adjustments to the PPP loan. So unfortunately, it's going to depend upon where you are in the period. So we have clients that have had the loan now for 6 weeks, and they're coming to the end of that period of time. So, I would just be hopeful that Congress, if they elect to make some changes to the rules, they change the rules sooner rather than later. Because I'd hate to see somebody, a week or two from now be finished with their funds and apply for forgiveness. And then, at that same period of time, Congress changes the rules when basically they've already used the funds and, did it under a specific set of guidelines. So,
Yeah. So we got another question. It says, it kind of talks about the payroll cycles. If it stays at the 8 weeks, and there's some flexibility allowing me to include 4 payroll cycles, even though only 3 of my payroll cycles technically fall within my exact 8 weeks. And you're correct. There's some guidance on that, but I think where you can find some comfort in that is, one, there's some guidance on how to do that. 2, I would hope that the bank that you're working with, and especially if you're under the $2 million, will take in, the spirit of what the PPP was for and work with you on that. Because you got to remember, it's your banker that's approving your forgiveness. So if you're under that $2 million limit, from what they're talking about now, there's going to be no look back.
Yeah, and remember that that's one of the elections that you as the borrower get to make when you fill out your forgiveness application. The first election you have to decide on is, am I going to use the covered period, which is the 56-day time frame that starts on the day that you receive the money from the bank, or am I going to use an alternative covered period that that would include a 56-day window at some point in the future after you've received the money. So you have that option of determining whether you're going to use the covered period, which is defined by the day you receive the money, or an alternative covered period, which is a 56-day window in the future after having received the money.
And Steve, I think it's probably important to point out that for as much as we all hope that those dates would fall on regular payroll cycles, business owners are going to have to calculate and allocate on a day-by-day basis a partial part of some payroll or another, because there's no scenario that any payroll is going to fall nicely on that 56th day is going to be at the end of a payroll, and we can just simply take the payroll report. Is that correct?
Yeah, it's for most people, it probably won't coincide exactly, but at least it gives the borrower some flexibility to be able to move that 56-day window. You can't move it back before your disbursement date, but you can move it forward. And you do have the ability to play with that 56-day window. That's why we created that cheat sheet that we shared with everybody last week. And it gives you the opportunity to do your calculations on that cheat sheet and kind of figure out what's going to be the 56-day window that works best for me from a forgiveness perspective.
Yeah.
Okay.
Go
ahead, Terry.
That how soon after the 8 weeks do we have to apply for the forgiveness? I don't think there was a specific time frame, was there?
No, there doesn't seem to be any deadline of how much time after do you have to apply, but it is just that you can't apply before that 8-week period of time. So, theoretically you could wait a while and apply, but candidly, it's in your best interest to apply for forgiveness as soon as possible, because remember that 6-month window of no payments begins on your disbursement date. So if your disbursement date, runs out, then and you wait till, let's say, 2 or 3 months after that 56-day window, you've already given up those 4 months of no payments, right? But the payments are continuing to apply. So you got to think about, I've got a 6-month free deferment on the loan balance, right? And it's going to take the bank up to 60 days to review whether or not I'm going to be forgiven. You don't want to be making payments on something that you could be forgiven for, is my point. So
Yeah.
it's in your best interest to apply as soon as the 56-day period comes to an end.
Kind of had a repeat of a question here. It's heard to change in the coverage period. That's not final. There is talk of it. So, but that recovery period from 8 to 24, whatever they're talking about changing it to, is not final. So stay tuned for that. Can you repeat what you said about choosing the dates of your covered period? Do you have to clear that with your lender? I would recommend you to work with your lender during this whole process and guide it. And then, like Steve said, you can't go backwards from your issue date, but you may be able to go forward and change the specific dates. But then also, as Marquita iterated, you may have to split a payroll period up and pick a portion of it.
Yeah, and that's why you want to run a couple of calculations. So figure out what works best for you.
Use the worksheet.
Yeah, use the worksheet.
We can attach that worksheet, if nothing else, to this recording again.
Yeah, we can throw that in again this week as well. Absolutely.
So.
Okay, well, I'm back. I don't know if it was obvious, but I had a power outage. I guess it helps if you plug your computer.
I noticed you disappeared. It makes me mad.
I've been busy today, and I've used all the power in the computer and didn't realize it wasn't plugged in. So that would help, wouldn't it? So I'm looking at the Q&A box now, and I don't see any additional questions queued as we speak right now. So I'll jump back into my moderator role. If our participants are not queuing any additional questions, I think we're going to go ahead and begin the shutdown process, and we'll finish early today. We'll probably finish in about 45 minutes today. So with that said, I'm going to do my normal close down, and that is giving each of you, Terry and Steve, an opportunity to have the last word on our webinar today. And I'll start with Terry. Your first shot at the last word today.
Steve went over some really important information on your cash flow. And I think it's important. We're getting calls from people really concerned that the PPP didn't help them because all it did was pay their employees. Well, you're right. And there wasn't a lot of money in there to help with your working capital needs. But also keep in mind something we talked about kind of at length today on a previous webinar was your bankers right now have kind of got a sigh of relief in that there's not as many people applying for the PPP loans right now. So if you're in need of working capital loans, you can still go borrow money through a regular SBA loan. And all of those new loans right now have a 6-month forgiveness on them. The government pays the first 6 months. So that's great. And it may be an opportunity for you to refinance some lines of credit or things like that that may be at a higher rate, and stretch that out into a regular loan, which could really help your cash flow, going back to Steve's presentation. So and I'd say one more thing that we talked about on that webinar that has become very prevalent, and those of you that are on here already probably talked to your banker, but know your banker personally and get your financial statements in line. So that's just become a glaring evidence.
Great, thanks, Terry.
Yeah. So
okay,
key.
Steve, you get the last word.
So absolutely key. And Terry's 100% correct. There's plenty of money available out there in other SBA loan products. Take advantage of it, folks, because the SBA is giving you 6 months free on that. When we did our poll, cash flow was real important to the audience. That's why we brought it up. We know there are people that are struggling with cash flow. We're going to dig deeper into it on our next weekly webinar. Of course, we'll always have the updates as they come in. If the law changes, we'll bring all the updates here as well. And then, following that, just wanted to let everybody know that in a very close second was sales. How do I raise sales? So, if that's a concern that you have, we invite you to take a look at some of our previous webinars. We had a really interesting guy with a technology video squirrel on one of our earlier webinars, and we are searching for other experts that we can bring to you on how to focus on increasing your sales in your business in the near future coming out of this COVID-19 pandemic process. So we will continue to bring more resources to you. We're very flattered that you are investing a considerable amount of your work week to participate in these webinars. We appreciate it very much, and we'll look forward to serving you further next Friday.
Okay, thanks so much. And again, reminder, sometime tomorrow or definitely through the weekend, you will see this video, a video of this webinar posted on our YouTube channel. All of the handouts will be included via our Google shared library. So go look for that if you saw something that you want to pull out. And with that said, I wish everyone a happy weekend. We're giving you an extra 15 minutes to get that weekend started. So goodbye. And with that, I'll close the webinar. Bye-bye.
Thanks, everybody.
Take care.